Yeah.
Talking about the scores we ain't set. We said winner 1, 2, 3, 4, 5. F fam over gram, that's a message. We be stacking bread up like it's cheddar. Talking about the scores we ain't set. We said winner 1, 2, 3, 4, 5. F dreams over schemes, that's a
Yeah, it's
One of
funny.
the,
We're always bopping our heads.
We're always bopping our heads. Yeah, that thing comes on, you start bopping your head. You know, one of the artists of that little band told me recently that they asked me, "Are you giving us credit?"
Every time you start.
Every time. That's right. So I don't know, man. If they go big and we don't give them some written credit on this podcast, we might get a call from their attorney. We'll luckily they don't have one yet. So
Let's go.
all right. So here's a quick topic we can jump into, and let's make it human. So I had my annual physical this morning, and I'm fine as far as I can tell, right? As far as I'm still a healthy member of the matrix that we live in. I don't think I'm a robot. I don't think I'm sentient AI. At least they can't tell from blood work, and everything else looks fine. So that's great. Well, and it got me thinking. Most people generally, once you have a job and health insurance, you go and you do an annual physical, and you should, right?
Mhm.
But most people, unfortunately, we all have friends and family members, and maybe we've even been guilty of this ourselves over our lifetime. You get the results, which is just intelligence. It's statistics. It's data. That's what that is. And maybe they say your blood pressure is a little high, your cholesterol is not looking so great, your sugar levels could be improved. And here's 2 or 3 things you can do to go improve those things. And sometimes it's just as simple as, work on getting better sleep, hydrate yourself better. How about find a gym or go for a walk or find some sunlight? But yet most people don't do any of those things. What do? They get a prescription drug or something, and then they just sort of put a Band-Aid on the symptoms. Well, our industry is very much the same. A couple of years back, a model match client said, "Can we rebuild our portfolio? Should we make a change, or can I at least see my past transactions?" And of course, the answer was yes. But then that got us thinking, well, okay, so you can see it, but what are you going to do with it? Like you need to take action on this. And so if we can give you more intelligence, like, other data points, whether it's equity or AVM or rate or contact information, to then put you in a position to then do something with it. But statistics say that we're not protecting the work that we've already done, whether that's with a borrower or with a referral partner or with an employee for that matter. If you think of the team that you just built, are you staying on top of the proper conversations with them to ensure that you retain? Retaining is way cheaper than gaining something new. So just some statistics, and I'll throw it back to you. The typical lender statistically retains 1 in 5 borrowers from the point of purchase then to the refinance. So there's what? That's 20%, if not less. I think that number's high. Servicing retention is at 18%. It used to be at 50% not that long ago, 2011. So some of these things start to tell me, it leads you to the next statistics and things that we read from, whether it's a Stratmore or Blend or other spots that put out some data like this. Bain and Company has an example. Borrowers and customers across the board say that the experience and the relationship is more important than price. But we use price and rate as an excuse. So I'll throw it back to you. And let's try to keep it simple, because your world is big. I know that. Number one, you have to know what the data is. Number one. Number two, what do you then do with it? So let's start with the borrower first, and then maybe we could talk about the referral partner, and then we can even talk about just your team, just those operations or sales that are part of your team. So borrowers, you closed a deal. I was your borrower. We did a purchase together. How often am I talking to you after that? And what are we talking about? And what are you looking at to know what to talk about?
Great question. So we do quarterly financial reviews, every single client we've ever closed with.
Can I ask a quick question? Do you prep me for that during the application process, like long before we ever close the loan?
From the initial touch. So the first conversation with a client is generally, depending on where it came from, right? So if it's online lead gen or partner connection, our partners are regimented in the connection where it must be a group text, so that barrier is dropped, right? Because now you got connected by somebody you already knew. Hey, it's such a pleasure to meet you, Eric. I'd love the opportunity to assist. By the way, just like you saw in the connection, there's a regimented response with here's my digital business card. And then there's also another regimented, we call a custom client dashboard that's got power through Housing Link. So shout out to Scott and his team, where we actually give them our calendar to book a time, PowerPoint presentation, a slide deck, the custom AI, and then our YouTube channel. So their initial connection is like, what is all this? Right? This is crazy.
Like, I thought I was
Now,
just buying a house.
dude. So then in addition, we start adding some little widgets at the same time in there, depending on the consumer, if it's a buyer or if it's a refinance, right? Because if I'm talking about buyers, it's usually monthly payment, cash to close, benefits of homeownership, and all that stuff. If it's a refinance, it's usually tax strategies, debt consolidation, things on that nature, because it's two different types of consumers, right? So, so the answer to that question, I think, is I've got about 3 seconds. Before I used to say 5 minutes or 30 seconds. Dude, in today's digital age, you got about 3 seconds to wow the client. And the first one's here's a digital card. Cool. A lot of people do that nowadays. Here's a custom dashboard with a video of me saying, hey, what's going on? Our referral partner just connected us right now. My name is Abdel Kwame. I run Got Mortgages. We're a hyper local lender. We give you a national feel at the same time. We're going to go over so many different options specific for you and everything that you have in place. So excited to talk to you. Please let me know your preferred method of communication, CTE, call, text, email. Looking forward to collaborating. I can't tell you, man, so many people love that. They reach out, right? They book. Some book on their own. Some is like one Mississippi, two Mississippi, they didn't answer. So we're regimented in screenshotting that consumer, if it's a direct connection, sending it to my team, and I just tell my team CNS. CNS means call and schedule. So it's in my phone because I got to save Eric Levin in my phone, and in the company part, if you have an iPhone, or I think Android is the same, I put the referral partner. So I usually say BY, which for me means buyer, and I say BY slash Thomas S. Right. So Eric Levin is a buyer, and Thomas S is the agent that referred him. Right. So that's my approach. Now, when we do the annual financial reviews and the quarterly financial reviews, the quarterly are very short check-ins, and it's also the opportunities when I introduce other partners. So spring and summer now, we go back, and I'm a part of BNI, right? I'm a part of several networking groups. So there's always thinking outside the box, right? Because you're a traditional powerhouse team of real estate, of realtor, attorney, title. We're talking to each other every day, right? But then I got movers, I've got contractors, I've got inspectors, pest control, which is a big one now, power washers. So this second quarter, right, when it was May entering now into July, I was a little proactive, although we got like so much goddamn snow in April. I was like, hey, by the way, dude, just keeping you updated, right? It's about to be the spring and summer. Holy crap! I don't know about you, especially if it's a new homeowner. Who's taking care of your lawn? Who's taking care of your pest control? Who's taking care of all that stuff? And you know what? They're gonna be like, I have no idea. Well, I know you're new to the area, Monmouth Ocean, or wherever area. I'm going to actually connect you with, and we create a custom link dashboard with that referral partner. So when I say I'm going to connect you with John Doe or Mary Smith, in that, it's not a random connection. It's also another custom dashboard with that partner's information in there. Now, not only are you going to help Eric retain that client, in my opinion, as you hear me say this, I also bubble wrap the client. I don't want you being introduced to a different landscaper because their son might be a new loan officer. I don't want you being introduced to a pest control because they might be invested with a JV with a real estate company, and now that realtor is going to now help you, and now that realtor is going to sell, or that realtor is going to introduce you to their mortgage guy or gal. And we do it, man. We have so much fun. Listen, do I have clients who we reach out from a refinance opportunity, and ABC servicing company or XYZ servicing company is crushing my goddamn rates? Of course. I mean, there's companies. That's why I'm a 95% purchase money driven originator. Right? I know my consumers are refinancing because they're telling me, hey, you're able to offer me 5.9, but my servicing company is offering me 5.5. Bro, that's freaking awesome, dude. Run with it. I'm
Okay,
not.
so stop there because you just went to a place that I wanted to go to,
Of course.
which is I know that you track the output of your input. Meaning, if you're going to promote a HVAC contractor, but that HVAC contractor in turn is not then promoting you, you're going to stop working with that. That's right. You're going to stop working with that HVAC contractor. That also then leads to things like when Eric comes to Abdel and says, "Hey man, I got this opportunity to consolidate, refi, whatever, cash out, and here's what here's the numbers, and you can't match it." You're going to say, "Look, I root for you. I need you to be in a good place." So I think as your consultant, as your advisor, as your trusted advisor, I'm telling you that you should go get it. Now, if there's some challenges along the way, come talk to me. And either he can help you navigate the challenge or I can be a backup solution. I love that because when I look at borrower churn with a model match user, and it happens often where someone will say, "Oh, my borrowers don't leave me. I retain all my borrowers." We pull them up and we just can click one button and you can see what has been your churn over a certain period of time. And more times than not only is it surprising, but there's people on there that are surprising. Hey, that's my buddy. That's my neighbor. But I think those people are not doing what you're doing, which is basically saying, I'm not a loan officer. I'm your wealth advisor. I'm actually I'm gonna bolt on to you and help you save money and create efficiencies on not only growing wealth over time, but protecting that wealth through HVAC contractors, through pressure washers, through, I mean, you name it. You're not making money when those things happen. Now, that said, you are indirectly making money because the referral partners, all of them that you just talked about, are now sending Abdel more business. It got me thinking, interestingly enough, I just had some emergency drain line work done on my house that was very expensive because my house is, my drain line is not 75 feet from the main. It's far away and it's down a hill and it's near a creek. And so anyway, but they had to cut up a section of my driveway to get to the rest of it. And it's asphalt. It's an asphalt driveway. Do you know the first 2 text messages that I sent to find out who should I call to repave my driveway? They were local real estate agents.
Makes sense.
I mean, that's the first thing I thought of. And by the way, no, that's not true. One of them sold me the house that I'm in today. The other one is a buddy who I've gotten close with. But I love what you just said because as I've gotten older and I realize don't do this the hard way. You already have a trusted advisor that helped you with your home. Why can't that person help me with everything that has to do with my home? So just backing up, the quarterly review, man, that's easy and that's something anybody can do.
Yeah, and listen, we started obviously implementing some agentic AI for texting clients too. So literally, this AI is texting the client, and we give certain metrics for it onto if a client has less than a 6% interest rate, don't talk about refis. Just check in. Hey, how's everything going? How's the family? Oh, family's good. Great. Remind us again. What grade are they in? Boom, boom, boom. Then we started talk about client experience, right? During the transaction, when a client goes through the process, man, they're getting a handwritten note card that says, hey, thank you for choosing me, and interpolation, who the referral partner is. The offer gets accepted. They're getting moving boxes. And dude, I can't tell you how many people thank us. Hey, thank you so much for sending these moving boxes, man. We really need it. And I'm like, of course, that's what we're here for.
What a small investment that moves the needle so much, right?
And a file closes, and then they get a pretty cool painting of the house itself from an outside, like an outside picture that they probably grab online and stuff. And dude, I can't tell you, man. So it no longer comes about again. I think Dave Savage says this right: advice over price. And we're doing all the top tier connections and combos, but I'm also calling the client, and I'm like, hey, 2 days ago rates popped, right? With some of the stuff happening geopolitically,
Right.
and then just as quickly as they popped, they dipped. So when rates popped, they said, hey man, I know we're not closing until June, but I got a pretty good feeling that we should lock. And then if the rates improve, we could do, a float down depending on, how much it improves by. And clients are like, whatever you say. And I'm like, well, thank you, but we still have to jump on a call, whether it's Zoom or phone call. And I've said this before, right? Then we got to follow the purposeful process of, using Mortgage Coach and Gamma and putting it in front of you. That client experience really goes a long way, man. And 19% of our business last year came from past clients. And not just like personal refinances and stuff. Because again, I said it earlier, I'm not a refinance lender, but that personal client is did we did 9 HELOCs last month, 9, and you
Wow.
know why? Because last month was April. April is when people are like, man, my backyard looks like shit,
That's
and I
right.
got a lot of equity in my house, and I really don't want to tap into my savings. So this guy keeps telling me about HELOC after HELOC after HELOC after HELOC. He tells me straight up, because I do it in a video. He tells me straight up that he's putting two pennies together. That's what he makes to do the deal. But he also knows that he wants me to live comfortably in there. And he also told me that he has a potential contractor that he can simultaneously recommend that is also going to give me a 10% discount for using him if I drop the word got contracting.
Yeah, you've put yourself in a situation where you are, so you think about like the bank to mortgage relationship. If you're a bank owned mortgage company, the bank is the hub, the mortgage arm is a spoke, and then there's other spokes relative to that hub and spoke. In your hub and spoke, you're the hub. All the other ones are the spoke. And I think far too often the originator or even the company views themselves as a spoke, even if they don't realize that that's what they're doing. They're actually waiting for something to change. And then that trigger creates a conversation. You're not waiting. You're actually talking all the time, creating value. And then when something does change, I, as the consumer, don't view you as taking advantage of market conditions that have changed. It's just, no, now's the timing is right. Now is when we pull the trigger. I got told by somebody a long time ago. I've never forgotten about this. It was somebody that was difficult to work with, and I told him what to do. Like I just said, this is what you're going to do. And this guy was a big, tough hunter from the South, very successful mortgage banker. And at the end of it, because it worked out, whatever I told him to do worked, thank goodness, because it doesn't always work. But he came to me and he said, you know what, man, when you build trust with someone, sometimes people just want to be told what to do. And what I like about what you just said is you gave the example of someone saying, just tell me what to do. But then you stopped and said, well, hold on, though. That's not enough. I'm actually going to educate you and I'm going to take it one step further. Okay. But I want to go in one more direction before we break. I also think that all of this really relates to statistics that have been around for a long, long time. And that is employee retention and employee counter offers. Now, we see it all the time in our industry because there's such a recruiting race to win talent, to win the blue chip players. And I could argue to win the average ones as well, or sometimes below average. And there's a lot of money that gets put on the table. Statistics show, number one, that I think it's like 60% of people that stay at your organization because of a counteroffer within 60 days are already looking at something else. And over 60 and over, let me go back. The 60% is that they leave within 12 months. So by the time you're sitting at the table trying to retain someone who has an offer or an opportunity elsewhere, you're already too late. Um, so let's talk about that for a second. Number one, the muscle should be the same. The muscle should be the same, just like it is in protecting your churn. What do you find that you do as a leader, and you're doing this more and more because your team is growing, that has retention value that doesn't seem like a retention movement to either you or the person you're in front of? Anything you're doing? By the way, I think a lot of what you just described is actually a retention play because you're building a model that if the person leaves, they realize they're not going to get all these other things anymore. But is there anything else that you're doing?
Dude, I wish I could grab a snippet from my sales huddle as we were wrapping up, because Trevor, who's our business development manager, brought it up. And we were talking about value. We're talking about this. We're blessed with our company. We're in the top 10, both for personal production and then also for team production. And personal, I think like 6, team we're like 9. So of course it's the sandwich method, right? Hey guys, kudos to us, pat ourselves. But there's also 8 other bastards that are in front of us. Um, and there should not be 8 other people in front of us with everything that we're doing, right? So you hit him with the pro, and then he brought it up, right? Where it's like, so if you guys were ever thinking about everything that we got going on or whatever it is, make sure you guys reconsider. And I stopped the mid sentence and I'm like, no, fuckers, if you guys are thinking about leaving, leave. Like I'm telling you right now, if I find out that you interviewed somewhere else, you will find a termination notice 30 seconds later. Because once you open that door, you're out, dude, because that means that you've lost your trust in me as a leader. Now, I will certainly regroup after I fired you and find out where I could have maybe potentially improved in my systems and operations. Um, but Eric, you know me more than most. We practice what we preach, man. If we sit here, we're working with each other on several ventures, and when we work with your team, and we're like, hey guys, we're going to do ABC, and these are some of the things that we do strategically. I'm not just telling you, bro. By the time we're done, there's a full blown Google Drive housing link, information, PDF, guide, video, educational touch point, SOP, whatever it is that we're asking you to do. I'm a producing manager. So I'm in the trenches with you. So if I'm asking you guys to call your referral partners Monday, Wednesday, Friday and update them, if I'm asking you guys to go to those open houses and do it, it sucks. I didn't do them for 3 years. Then I started asking myself, yo, you are not too good for an open house, dude. You're meeting potential borrowers, but you're also meeting potential relationships that realtor is bringing simultaneously to help cover the cost of that open house, such as a home inspector, power washer, title person, and so on and so forth. Um, my operations team, my ops manager has been with me since the start of my career. My admins have been with me since the start of my career, so a little over 8 years. I've been with the same company since the start of my career. So, talking about churn and retention, it's not the company that makes me, it's my business model that makes me. Now, certainly the company gives us the advantage of certain platforms and operations and stuff. Now, my originators, on the other hand, the ones who are producing originators, have been with me for quite some time. The ones that are duds, you are going to get a termination notice for lack of production or lack of consistency in attending meetings and things along that nature, right? So I monitor that stuff. And if you're a cancer, I will get rid of you. And I have gotten rid of top producing originators who don't align with the mission of what we're looking to do. And frankly, your business model cannot prove to me otherwise that what you're doing is maximizing your potential. And if I find out that you're second guessing to an extent what we're looking to put together without the physical proof, because if you tell me, hey man, the updates are too much, I don't really think it works, I'm going to try it this way. I'm going to watch what you're doing because you might be right, right? You might tell
I love
me
that.
that,
Yeah.
hey, networking 3 days a week is a little too much. Bro, you're right, man. Trust me. Ashley will agree with you. My wife will agree with you. But if you tell me that you're replacing it with maybe time blocking 2 hours a day, I'm going to watch that activity and I'm going to be like, you know what, man? Chat, which obviously we're not gonna get into AI, but we're big on AI. Connect it with whatever AI platform, Chat or Claude, and ask it to audit your calendar and tell me what did I do in March and what did I do in April and how did I do successfully and match it to your closings. And if I look at that originator and that originator had a great month, I'm gonna be like, listen, guys, I was wrong, and I have said that previously where I was wrong. You know what? Maybe you shouldn't network as much. Maybe you shouldn't join certain networking groups. Maybe you should prospect with the database that you have. But if you're not producing or you're not having that opportunity, that retention is going to be very low, and you will simultaneously find the door hitting you on your way out.
So a couple things on that. First, anybody that listens to this or has listened to you or heard you speak or works with you, you're an outlier. But maybe you shouldn't be. And that is, what was it? Jim Collins and Good to Great, which I can't say I read the whole book, but I've read lots of it. I'm sure it's fantastic. Everybody talks about Good to Great, but I do remember there was the whole, conversation or section about sometimes you got to get people off the bus to make room on the bus for the
Yes.
right people. And that's what you're saying. And you're saying it aggressively because you're an aggressive dude.
Gorilla,
But
baby.
that is basically what we're talking about here. I'll throw out something else. Ken Perry years ago said something to me. I think it was during COVID when everybody was losing their minds. And I just said, how are you retaining people? Now it was post COVID, like we were past it, but we were still in this weird remote situation where people still weren't, they were relearning how to interact with human beings again.
Yep.
And I said, how do you manage this whole thing and then relate it to retention? And man, he gave me the most simple answer that's so true. He said, we go for a walk.
Hmm.
That's it. Now he's in a situation where his office was in Vancouver, where they could literally, like my office is the same way. We could just go for a walk. Hey guys, we're going for a walk. I don't know what we're going to talk about. We're just going to go for. Now I do a really bad job of this. It comes in waves. I'm a bit of a loner, so sometimes when I go for a walk, I just want to be alone and go for a walk. But you do those things, Abdel. I know you do because I see them on videos and we talk about them. And you have a lot of team events, whether it's fully business related or something that's a little bit more informal. You are taking your team for walks. The other thing I wanted to say was I got this on my desk right now. So this book, Think Again by Adam Grant.
I'll write it
I'm,
down.
I'm I'm only about 50 pages in, but Adam Grant's a well-known organizational psychologist. He's got lots of books. But what that book is about, and or what Adam writes about, Abdel, is the value of not being married to your ideas. The value, and right now we're in a world where maybe we voted for a politician, and no matter what that person does, we're going to back them, even though it's going against the things that were most important to us. It's okay to say I was wrong, or we tried this and it didn't work,
Yep.
or maybe this part of your process should be to purposely look for things to break. I remember somebody once told me they don't manage their day around how many yeses they get. Like when I was playing basketball growing up, I don't leave the gym until the last shot not only goes in, but it has to sound just right when it goes through the net. Exactly. I could make it, but if I heard that little tick against the rim, I'm not going home yet. Well, what he said was he wouldn't go home until he got a certain amount of no's.
Hmm.
He had to get 10 hard no's within his time blocking of business development before he would go home. So some of this stuff is like proactively not being afraid to fail, to break things, to do the hard work. Okay, so tying this all together, if there's only one thing that's taken away from this conversation, it's quarterly reviews. Don't just say you're doing them, actually go do them. And that's also something that someone like me could take away from, because the truth is I have lost groups that have either, decided to use a different platform, or their adoption rates went down. And I could say, well, why aren't you logging in? Well, wait, why'd you get distracted by something? Well, but if we're not doing quarterly reviews, monthly reviews with them, well, then I'm to blame as well. So for anybody listening, you want to impact your churn, do quarterly reviews. Secondly, I know you said this, Abdel, but I'll just counterpoint it. Stop calling yourself a purchase originator. Yeah, you're a purchase focused originator. You and anybody else listening to this that says, well, I'm a purchase focused originator, but you protect your churn because you understand it's not just about the refi. It's about the multiples that you can gain by the process of protecting your churn. Full stop. That's it.
Totally. And I didn't want to stop because that was awesome. But a couple things. One, I hate this word, just like I hate recruiting and just like I hate networking. We got to figure out better ones. Business development kind of helps. I hate this word culture. I believe in it, but you brought something up about Ken and walking with his team and stuff like that. So what we do now, we opened up our second office in Toms River. It is 45 seconds away from my house. Yes, I literally turned the stopwatch and saw how fast my Cybertruck is flying through traffic. Don't do it.
That doesn't surprise me.
My originators, I always tell them in the summer, because now it gets hot. I will be in the office at 7 a.m., which I usually am. I don't expect them to. They come in at 8:30. We will work until 12:30. We will then all, about 9, 10 of us, will go to my backyard, and we will all literally sit and work in my backyard. And I've got a pretty dope backyard. We've got an outdoor gazebo, outdoor kitchen. There's 3 beers on tap. Sorry, HR. There's people pacing back and forth in corners of the house. There's literally people sitting down, freaking panning while they're taking calls and emails. There's other business partners now, which was kind of like a small thing that we wanted to keep to ourselves. But this past Tuesday, I had two financial advisors come over, a DJ come over, and a pest control guy. And we've got burgers on the grill, we've got hot dogs, sausages, steaks, guys who are literally retapping the keg because the keg kicked. It's like 1 o'clock in the afternoon on a Tuesday, and there's one guy who's like, I can't figure out this deal. So another originator steps in, a financial advisor is talking, the DJ is talking about retaining clients, and someone's saying we already booked somebody. So he hangs up. So now we're like, yo, why didn't you say about what service did they do and how much did they charge you and what could I have done better so I can improve my customer experience? That's really fun, man. It's the culture. And then we're jumping in a pool that we just got freaking heated and paid a lot of money for to do. Like, we're having that fun time where money is taking care of itself, numbers are taking care of itself. And also, when you're doing quarterly reviews, don't just do them for your consumers, do them for your partners too, right? Do that one to one, right? I told you I'm a part of BNI. I joined about 7 months ago. I have done two, well, entering my third now because we just reached out, one to ones, right? And it's cool because every single time it's, hey, I've learned a little bit more about your business. Thank you so much for sharing it 7 a.m. on a Friday for the last goddamn 6 months. Thanks if we've closed business. And if we haven't closed business, here's again some strategies that we're doing of how we can connect with them, right? And I know we're a little over and we can go on for hours, but that is, you have the data. If you're using Model Match or if you're using your own personal Excel spreadsheet, whatever it is, it's in front of you. Stop staring at the screen, right? Delegate it or pick up the phone, time block an hour of your time, pick up that client. Some people do last names by letter. Just pick up the phone and start, dude. And if you could retain that one extra consumer, especially during this time now where it traditionally gets hotter, especially on the East Coast in terms of the market, I can guarantee you if you reach out to that one past client, that one past relationship or whatever it is, if there's a past relationship that you worked with that didn't, yo, why aren't you using me, dude? We've got a lot of really cool modern day strategies that we're doing. And if they're like, well, fuck off, my lender pays 10 grand for my Zillow bill, hang up and move on to the next, right? But that touch point, because that lender who's paying that $10,000 Zillow bill, all it takes for them is to have that 1 or 2 months where they don't close a deal and they cut that relationship.
Mhm.
And you could easily swoop in. If you're top of mind through social media and personal touches, you'll have that much more opportunity to retain a client.
Same thing as it relates to your past transactions and the relationships you've already built. If you're not identifying those opportunities through data and then having a specific call to action monthly, quarterly, somebody else is, and somebody else is going to end up with that borrower that you put all that work into. All right. Final thing I'll say is mortgage rave at your house is what I'm hearing on a go forward basis. So all right,
I'm
picturing this like outdoor concert, mortgage banking. Let's get some stuff done and also have some fun. Dude, I'm ready to get my NMLS ID and come work for you, my man.
Let's go. There's definitely some house music blasting. We put in two Amazon Echoes in this massive gazebo.
I'm picturing this. Hey, we need video. We need some video evidence up on LinkedIn and social. All right, brother, you're the best.
Thanks, man. Appreciate you.
Yep.
See you.